Hey, folks, welcome to InTheMoneyStocks.com's live trading action video. My name is Gareth Soloway, Chief Market Strategist here. Today's date is Wednesday, January 2nd, 2019. First off, Happy New Year to each and every one of you. Next, I have to touch on this oil reversal today. This is an epic reversal. It signals a huge turn in oil, in my opinion, and I'm going to explain why. So first off, in the overnight, the futures dumped out on the S&P hugely because of the China manufacturing numbers, basically showing a contracting economy in China. So obviously that's bad for oil, right? Because it's less demand. If China's growth is slowing, or even in this case going lower, and they're contracting, the oil demand is going to drop. So in theory, you should see oil drop in the overnight, which it did, and then it should stay weak because of that lack of demand. Well, look at this, folks. It opened lower on the USO today, and look at the reversal it staged. Oil now up strong, and this isn't even taking into account everything on spot crude. Spot crude was even down more in the overnight. But bottom line is, this reversal, when you see negative news that should cause something to drop, and it opens lower and reverses and closes strongly to the upside, that's a huge technical reversal signal. So that's what you have on this chart, folks. I'm going to flip over to the daily chart so you can see exactly what you're looking up on the daily chart. Here was your gap down, and look at this surge. You're making a new recent high. You can see this was your previous pivot reversal level. You're now above that. 20 MA is your next target, probably hit within a day or two, and then we'll see if we can get above it and make a run. But oil, folks, this is huge. This is huge, and I alerted people to it this morning on Twitter. I said, look at this oil. This is just as it was going towards the flat line. It wasn't even green yet. I just said, guys, this reversal could be big on oil, and certainly it was. So that is a major mover here today, and again, I expect oil to trade back into the mid-50s in the coming month. That should help stocks like Schlumberger, which has been just decimated, make a big move up. Short term, you have at least a 39 and a quarter target on it because of the 20 MA. But honestly, this should go back to 45. Even a 45 retrace from this recent fall is only, that's only a 3.382 Fibonacci retrace, not even that much. So I would say 45 is your target on Schlumberger. Another thing I want to point out, folks, you have the January effect starting to take place. Take a look at General Electric today, up 7%. Why is GE up today? Well, the answer is very simple. You had all these funds dumping shares into year-end. They didn't want to show it on their statement to their clients at year-end, so they were dumping all the way up until the end of the year. And then you also had tax loss selling going on. Well, guess what? Those two negatives, which caused a majority of the selling, if not all the selling, are now over. It's a new year. There's no more tax loss selling for 2018 anymore. The funds, well, if they didn't sell it before now, it's on their statement going out to their clients as of now. So these type of things are over. This is called the January effect, where all that selling kind of all of a sudden vanishes, and look at what happens. GE Source. GE is going higher, folks, too. Minimally, you're hitting the 50 MA at 850, but I think it's going to this level, the $9.15 level, somewhere right up here. That's my near-term target. Probably in the next couple weeks, we should hit that. Only about $1 away at this point, so 2 more days like today, and you're right there on General Electric. This can be seen in other stocks. Anything that's been pounded down going into year-end that you've seen a lot of firms just really want to take off. In fact, oil could be talked about as that too. There were a lot of funds that were forced to sell into year-end because of margin calls and so forth, because of the dramatic decline there. Many funds went bust, actually, that were commodity funds because of the oil positions that they over-leveraged. All of that is now reflex bouncing back up. And again, this is where it's at, folks. So look for the January effect. The January effect is seen on many, many stocks that are at their lows. I have a small cap here. I'll show you. VERI, up 7% today. Look at this. Dead lows. This was all, so it had this pop on a buyout, suspected buyout that was actually even above this price, but it opened here, and then this was all people just selling into the end of the year, into December 31st, and look at today, already starting to pop up a little bit, even with the S&P. I mean, S&P is still slightly negative, so I mean, it's certainly, you can see still down $1 on the S&P, so it's not like the markets are ripping today, but these January effect stocks will have big, big moves to the upside. That I do have some of that, and I expect that to continue up quite substantially as well, probably back to about $6 or $7, maybe even as high as 10 if the buyout comes out to be true. So we'll have to see about that, but really pretty amazing price action. So bottom line is, folks, this is where it's at. InTheMoneyStocks.com had a record year last year. 94% success rate, over 300 trades in the chat room, an 84% success rate in the research center last year. Huge profits, over 700% net profits if you add up everything together. take out the losers, it adds up to about 700% there. Even if you just say 10% of your portfolio was put in each position, you're still north of 70%, while the average person this year was negative, or I should say in 2018 was negative. And we're going to do it even better this year. I'm going to tell you why it's going to be better this year, why trading in all assets, all areas, chat room, which is day trading, swing trading, which is research center options, because last year you had periods where the market was dead. Like basically, January was straight up last year, and then it corrected into early February. And then from basically March until October, it just went neutral to higher. So that period was dead. And even with that, we performed like that. So now think about this market going into the year with the VIX elevated, the market volatile, swinging 5 points on the spiders daily, 50 points on the S&P. That's going to give us even more action. The more action, the better. That's the bottom line. So come join us at InTheMoneyStocks.com. Take the 7-day free trial, folks. It's the only way to check us out. Many people, you can ask people that have taken the 7-day free trial. They'll tell you in that 1 week free trial, they made enough to pay for the year for the service. I mean, just that good. Have a great one, guys. Hope to see you there making money with us in 2019. Started off with a bang. Take care.